Good morning, traders and investors. My name is Roger Scott. Today is December the 16th. The month is almost halfway over. The year is almost over. What do I say? Well, before I say what I usually say is, where in the world has this year gone? But all right, that's what I always say. Now let me get into it right now. There's a lot of stuff going on. It's kind of in the background right now, but I want to bring it to the forefront because this is what you need to pay attention to ASAP. First of all, markets are a little stronger than expected. They're kind of little dovish. They're not going all the way. And I expected this because we have today the conclusion of the FOMC announcement. That's happening at 2. And typically, large traders don't like to place big bets in anticipation of FOMC because we kind of know what the Fed's going to say. They're going to say, we're not going to do anything. We're not going to raise rates. We're not going to lower rates. But what's most important is their prognosis, what they're going to say for the future. That's really the key here. Because this Fed likes to tell us long ahead, beforehand, what they're going to do. This is not the Fed you want to play cards with. They will lose every time. So now, again, markets are a little higher, but again, Moderna came out with a new vaccine that looks like it's on the cusp of being approved by the FDA. There's promise in terms of global financial liquidity. There's hope that the Democrats and Republicans will agree and give us some more aid. But all this is kind of in the background. Let me tell you what's in the forefront right now. What's in the forefront is this retail sales report. And I'm going to tell you why it's very important, and it's actually coming up in about 6 minutes. I'm going to read something to you, and this is important. This is the last this is for November, okay? We're not going to get the December sales report till mid-January. So this is the last sales report of the year, and it's going to tell us how we did on Black Friday and Cyber Monday. And here's how it's looking. November indications have been uneven, including a sharp drop in unit auto sales and mixed signals on the success of Black Friday. We don't know. Expectations are looking for a 0.3% decrease overall. Decrease. That's not what you want to see going into what could potentially be the biggest trigger for a rally at the end of the year, the Santa Claus rally, which is triggered by the retail sales. Overall, a 0.2% increase excluding vehicles and gas, and a 0.1% increase for the control group. So this is what the sentiment looks like, and I'm going to tell you right now, it would be really good for the market if these numbers were better than expected. And if they didn't, I don't know if it's going to be really bad for the market, but it's going to lessen our indication or chances of having a Christmas rally, because the retail sales report, remember, retail sales accounts for 2/3 of the GDP. And if we don't have good retail sales, that means consumers are not spending money. And it was already getting a little weaker going into November, as you could see here. It was still positive in October with indications of weakness. But if this report doesn't give us what we want, it's telling us that the economy is not expanding as fast as a lot of people like to think. Now, with that, let's talk about global economy. World markets advanced Wednesday after revived hopes of more aid for the U.S. economy broke a 4-day losing streak. Folks, don't bet on it. Not till January, not till Biden takes off. Don't you think Biden wants to take credit for this? Don't you think politically they're going to shuffle and huffle and do everything possible to first get Trump out before doing this? Think politically. We're in the middle of a political roller coaster right now. Usually big decisions aren't made like that, and Dems and Republicans don't usually come together. And in this case, just from a political perspective, I would assume the Democrats would make it very hard to make the deal till Biden's in office so Biden can take credit for it. Again, I'm not trying to take sides, and I'm not trying to be political. I'm just trying to think ahead and see how this may reflect the overall stock market. Overnight, the S&P gained 1.3% as investors grew hopeful that Washington can surmount its partisan divide to deliver more aid to a struggling economy. Don't hold your breath. Technology companies powered most of the rally, which helped push tech-heavy NASDAQ to all-time highs and causing more overbought levels for the stock market. Investors have been encouraged by signs that European Union and United Kingdom might finally broker a trade deal following UK's departure from the bloc. Yeah, don't hold your breath on that one either. It's only been a few years. Things move slow politically, okay? The brightening in sentiment comes even even as rising rates of COVID infections lead governments in Europe and elsewhere to raise their alert levels. I'm telling you, folks, if these death rates continue, if we have another close down, and if retail sales are bad, we are going to effectively see a repeat of what we saw last February. In the U.S., negotiations between Democrats and Republicans on another round of COVID relief have been dragging on for weeks, and it's going to keep dragging for weeks if we're going to see a repeat of what we saw many, many times. Fresh signs of cooperation Tuesday appeared to boost markets' confidence that Washington can get past its partisan divide. Not so sure about that. A vaccine candidate developed by Moderna and the National Institute of Health may be on the cusp of regulatory approval. Fingers crossed, said preliminary analysis. That's big. And small cap stocks did especially well, and they're still the strongest sector, a sign that investors are feeling more optimistic, not about the economy, but about the prospect of Trump staying away from China. Think about when all these small caps started going down. No Trump, large caps go up. They've been pent up for almost 2 years. Come on, folks, let's be real here. It has nothing to do with the overall economy. It has everything to do with political sentiment towards China. And again, record high. Russell is at record high. Who told you that was going to happen when it was lagging behind the market? I did, like 3-4 months ago. If you don't believe me, look at my videos. I talked about it almost daily. The numbers of U.S. workers applying for unemployment benefits is back on the rise. That's tomorrow's report, and that's what I've been talking about. The jobless claims and retail sales, these two reports, unless there's a deal in Washington, these two reports are going to be the most instrumental reports in deciding or figuring if we're going to have an end-of-year rally. And again, retail sales just comes out in just a few minutes. So I'm looking hopeful to get that report around 8:30 while we're still on here. Live action with Roger Scott. All right, let's continue here. So that's what the expectations are. Let's keep our fingers crossed that the numbers are better than expected. Now, looking at the broad market, here's what you need to focus on. You need to look at the retail sector, XRT. This is the sector. Now, it's near all-time highs right now, and the retail sales, if this index rallies over the next day or two, this is very positive. And right now, it actually looks like it could rally. It's in a nice horizontal congestion, and usually markets, as you know, they go horizontal, vertically. I'm not one of those guys that believes in 5 or 10 Elliott waves or Gann lines or any of that crap. That's nonsense. But in my opinion, that's nonsense. And in my experience over the last 26 years, it's nonsense. But if you guys want to believe in 15 waves and all that stuff, God bless you. So again, I believe the market's going to start coming up here, possibly if the report is good. If the report is not good, we're going to be seeing the 50-day moving average. The 3 stocks that I'm liking right now, and 2 are retail-based. Nike, let me show you this right here. Also a retail stock doing well, but be careful. I think earnings are coming out next few days. I think Friday. Let's see here. Earnings on Nike. Nike. Date. Let's put date so we get a little more. Yeah, September. Here we go. Date reported 3 days from now. So be careful. Be careful with Nike. It's got earnings of just a few days from now. That's a retail stock, and that's a stock people buy during the holidays. How about Boyd Gaming? Do people play video games and buy gaming stocks before holidays? Of course they do. Don't be silly. And look at this. Nice all-swing high, a pull-off for a few days. Looks like it's going higher again. I like this stock. I like Boyd Gaming. And lastly, Intercontinental Exchange. I think if we get another stay-at-home condition, if we do get government aid, we may see more people spending more money trading stocks like they did back in February, March, and April. I talked to a few guys who own brokerage firms like Tony Saliba, and he was telling us during Ask the Pros, I remember this was live, that people are opening up brokerage accounts at an alarming rate. I don't remember what he said, but the numbers was very, very high. Like the highest level he's seen in 20, don't quote me, but it was an extraordinarily high level. So I like the Intercontinental Exchange. I like the fact that it's making swing highs. I like Boyd Gaming, the fact that it's right up there. Holiday, Christmas, that's cyclical for gaming stocks if retail sales numbers are positive. Fingers crossed. And Nike. I like this stock, but remember, we got earnings. Most importantly, keep your eye on this XRT retail ETF. It's very vital right now. Now, Let's go ahead and update this. Let's see if the numbers are out. Consensus 0.3, 0.7, negative 0.7 to 0.1. Let's take a look. Let's take a look. Oh, man, I want to know how these numbers did. Let's see if they've been released. Oh, man. Oh, this is bad. This is bad, 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 bad. This is bad. Negative 1.1. Ouch. That's bad. These numbers are not positive. Look at the consensus and look at the actual number. This is what I was hoping would not happen. I don't think we're going to have a Christmas rally based on this number. This number is very, very, very bad. This is not a positive number. Think about this. Consensus 0.3, 1.1 actual. And remember what I was telling you. There's a lot of talk about how the market, how we didn't know if Black Friday, Cyber Monday was going to be strong. Well, it doesn't look like it was. Look at this. All the numbers are worse than expected. Vehicles, 1% positive, 0.9 negative. X vehicles, positive, 0.8 negative. Control group, 0.1 positive, 0.5 negative. That's bad. That's very, very bad. This reduces the chance of a holiday rally by a big, 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 big margin. So I wanted to give you that before I signed off. Now, I've got something important for you. The holidays are upon us, and that means you're probably traveling, shopping, entertaining relatives while trying to balance your hectic work schedule. That's what everybody's doing. And to that stress of watching the stock market 5 days a week, and you might be feeling a little overwhelmed. Who's not feeling overwhelmed during the holidays? So we'd like to help you out this holiday season by giving you a chance to put more money into your portfolio or your stocking, whichever you choose. All you need to do is tune in live. Watch Futures of Wealth, head trader Lance Ippolito's weekly Blitz alert presentation. It's happening Thursday, December 17th at 1 p.m. Eastern Time. Heck, that's tomorrow, 1 p.m. Eastern Time. I'll be there. In it, he'll show you how to spot unusual trading activity called shadow blitzes. They could put cash in your hands within 24 hours. And folks, Lance knows his stuff. He knows all the tricks of the trade. He knows all the tips, all the tricks, everything you need to help you get better returns from the market. If that doesn't fill you with some holiday cheer, I don't know what will. Click on the link below to learn how you can sign up. You got to check this out. There's no cost, there's no obligation, but you got to see Lance's weekly Blitz Alerts presentation tomorrow, the 17th of December, 1 p.m. Eastern Time. Do not miss it. Learn all the tricks of the trade from Lance. He's a pro. Click on the link below to learn how you can sign up. Do it now and have a great day. And I'm not happy with these retail sales reports. Bye, guys.